Hello friends, in the current video we will try to understand the concept of dissolution of partnership. In the current video we will work out the problems of dissolution of partnership firm. Alright. So how the problems of dissolution of partnership firm will be done, that we will understand in this video. Right. We will work out problems. Right. We'll see the question first. We'll take up the long questions. XYZ are partners sharing profit and loss in the ratio of 5:3:2. They decided to dissolve the partnership firm when the balance sheet as on 31st March 2001 as follows. Sundry creditors, capitals of respective partners XYZ, and we have provided assets, bank, debtors, stock, furniture, land and plant. Whereas we have provided the adjustment stating that the assets realized as follows: land and building, plant and machinery, stock, furniture, debtors and expenses of on dissolution. Prepare necessary accounts in the books for the dissolution of the firm. So we are asked to prepare the necessary accounts. So as you are already aware, in the earlier video we understood the journal entries and basic crux of the dissolution of partnership firm. In this video we will work out the problems. Whereas you are aware that, so in order to work out the problem, we require to open three accounts. One is realization, another one is capital, and third one is cash account. Right? So simultaneously we will open the account, we will work out the problems. Clear? So first, always starts from the asset side of the balance sheet, as you are aware. Right? So on the asset side we have bank, sundry debtors, stock, furniture, plant and land and building. What is the first journal entry that we understood? That all the assets should be transferred to realization account except cash and bank balance, fictitious assets. Right? Suppose debtors we have any provision is there, so we must transfer debtors at their gross value. This is our first journal entry. Based on this, we need to pass the journal entry. So bank balance we will write in the cash account, and whereas all these assets will be transferred to realization account. So the entry would be realization to various assets. So we debit in realization account. Clear? So in cash account we write to balance brought down. Opening cash balance we have 18,000. Then rest of the assets we will debit to realization account. To sundry debtors. Sundry debtors comes to 1,52,000. Then we have trade, stock in trade. Stock in trade comes to 60,000. Then we have furniture. Furniture comes to 10,000. To plant we have, and the plant comes to 2,90,000. Then land and building. To land and building I have written abbreviation here, you can understand, 1,12,000. So like this, what we have done, we have transferred all assets to realization account. Why did we transfer? Why we have transferred to this account? Because we are doing the process of dissolution whereby we will sell off all the assets, get the money and distribute it among the first creditors, then partners loan, then finally anything left over will be distributed by partners themselves among. So that is the order of payment. So that's the reason first all the assets should be transferred to realization account, and realization account is a nominal account. Why we open this account? In order to do the process of realization of assets. Nominal account always shows profit or loss that will be transferred to partners, right? So first we have transferred all the assets. Then second, so when you come to the liability side, we have only sundry creditors. So sundry creditors is an external liability, only one liability, it will be credited by sundry creditors in realization account, that is 1,50,000. The entry would be sundry creditors account at realization. Then capitals we have. So capitals will be written in capital accounts by balance brought down. Amount will be 3,30,000. Then we have 1,30,000. Then 32,000. Right? Capital balances we have written. Once this entire writing is over, now come to the adjustment, what the adjustment says. Right? Now if you see the adjustment says that the assets realized as follows: land and building realized value, plant realized value, stock, furniture and sundry debtors. These are the realized value, in the sense we have received from the sale of the asset. Then expenses of dissolution realization is given. Now we need to post them into the ledger. What is the journal entry for realization of assets? When we sell assets, what journal entry we pass? We pass journal entry because when we sell, we receive cash. So we write cash account data. Now the assets have been already transferred to realization account. Hence, asset account will not get credited because it is already closed. Now realization account will get credited. So the entry would be cash account data to realization. Right? So in cash account, we write to realization. So what are the assets we have realized? That individually we will write. Right? So we will write from land and building. We have realized 1 lakh rupees. Then plant we have realized 2,50,000. Then we have realized stock 45,000. Then sundry debtors we have realized 1,30,000. Right? So these are the assets that we have realized. So make the summation. Summation comes to 1 lakh plus 2,50,000 plus 45,000 plus 1,30,000. Right? So 5,25,000 is the total realization. So I made the summation that came to 5,25,000. Please, while doing the problem itself, check the values once again and be careful in the examination whenever you are working out. Right? So once we have posted this, what is the entry I said? Cash account data to realization. In cash, we gave a debit. To realization, in realization, we write by cash. How much? 5,25,000. Now, so next the question says that does expenses on dissolution. Whenever dissolution expenses are paid by the firm, the entry would be realization account data to cash. So we write in realization, we write to cash. How much is the expenditure? 4,000 they paid. We write 4,000. And in cash account, we write by realization 4,000. Right? So once the credit and debit is done, next. So all the adjustments are over in the question. No adjustment is still left. But bear in mind, this is the most important point that I am going to tell you. Once all the adjustments are done, just check, is there any liability still outstanding or still payable which we did not pay, or the question did not say anything regarding that liability. When you read the entire question, we have only one external liability, that is 1,50,000. It is 1,50,000. So regarding this sundry creditors, question did not say anything. So the question arises, do we require to pay this liability as nothing is furnished in the question? Or we don't require to pay as nothing is stated in the question? The answer is, though it is not stated in the question, we must pay this liability. That is the most important thing. Once the problem is done, you must remember. So what entry we should pass? The entry should be realization account data to cash. So in realization, we write to cash. So same book value we need to write as paid, 1,50,000. In cash account, we write by realization, 1,50,000. Though it is not stated, we must make the payment of liability. That is the basic thing you must bear in mind in dissolution of partnership form, right? So once you write the journal entry, then everything is over. The first step is to close the realization account and find out the profit or loss on realization, right? So make the summation, summation of the credit side summation 5,6,75,000 it seems. Now we will do the debit summation, then we will find out how much is the summation. So 152 plus 60 plus 10 plus 290 plus 112 plus 4 plus 150. So debit summation comes to 7,78,000. So debit summation is 778. Then our credit summation is 150 minus 525. So we are getting here we made a slight mistake here. We did not consider this furniture, forgot to take this 9,000. Now we need to consider. So it is realized value. So in cash account we write to furniture. So to realization 9,000 value. Then in cash realization account we write by cash 9,000. We have realized furniture even, that I missed out while writing. So furniture value is 9,000, which is given in the question. I forgot to take. Now I am taking, right? So what I have done, in cash account I have written to realization. In realization account I have written cash. So it is realization, right? So this is 9,000. Now so 7,78,000 is the summation of the realization account. 778 minus these values, we will get 94,000. So realization loss, we are getting 94,000. Now this realization loss, as we are getting credit figure, credit balance, then it is realization. This goes to by capital account, right? So in capital account, in which proportion they were sharing the profit and loss? In the question it is given 5:3:2. Their old profit sharing ratio is a 5:3:2. In this ratio we will distribute this loss. So 94,000 divided by 10, 5. So XYZ, X will get 47,000. Next fellow is 28,200. And next fellow 18,800. This is the summation of the loss. So this loss will be posted into the ledger of capital. In capital account it is credited. In realization, in capital account it will be debited to realization. How much? 47,000, then 28,200, then 18,800, right? Once this is posted, next is we need to close the capital accounts. Then find out the balance in capital account. So debits, credit side seems to be highest. I have written 3,30,000. So 330 minus, here we are having 47. So we are getting 2,83,000. So 330. So this 2,83,000 will be going to cash account, right? So the capital balancing figure will be transferred to which account? Cash account. So next one is 1,30,000. 1,30,000. So 1,30,000 minus 28,200. So we'll be getting 1,01,800. So this amount will be going to cash account. And the same way, last one 32,000. 32,000. That is 32,000 minus 18,800. So I'll be getting 13,000 200 is the balance. So these balancing figures which we have already transferred to cash account, this will be reflected in cash account, written as by capital XYZ, right? That is 2,83,000, then 1,01,800, then 13,200. So make the summation. The summation is 2,83,000 plus 1,01,800, right? Then 13,200. So the summation comes to 3,98,000. Now finally what we discussed in our earlier video of concept, that our cash account should tally, otherwise we are wrong. Always our cash account should tally. So check how much it is. So 398 plus 1,50,000 plus 4,000. So we are getting 5,52,000 minus 18,000 minus 525. So fortunately we could be able to tally the cash account. So bear in mind, always our cash account should tally. So in this way we need to work out the problem of dissolution of the partnership, right? So this is the procedure of working out the problem, and the question which we have done just now is one of the university questions which was asked earlier, right? So now we will take up one more partner, one more problem, whereby we will understand the concept, right? See the second question. Little bit change we have, so that's the reason why we have taken up this question. The question says that the following is the balance sheet of PQR 31st December 2005. The partners sharing P&L in the ratio of 5:3, the same ratio. Balance sheet we have given creditors, bills payable, loan from partner, loan from P, because PQR is partner, so loan from P. So what will be the accounting treatment, that we need to understand. Then general reserve, capitals we have. As we have discussed, loan from partner should not be transferred to realization. Instead, it should be transferred to, it should be separately, a loan account will be maintained. Then we have given cash, then sundry debtors minus PDD is given, stock, investment, then other assets. Then the partnership was dissolved and the assets realized as follows. Stock and investment realized 10% less than the book value. Debtors realized 17,500, plant 30,000. Freehold property was sold for 80. Fixtures were taken over by P at an agreed value of 1,200. Creditors were paid off at a discount of 5%. Q agreed to pay the bills payable. Expense of realization amounted to 1,000. Pass necessary journal entries to give effect to the above and show the necessary ledger accounts, right? So once you prepare ledger account, I will show you how to pass the journal entries. So we will start with the problem preparation of required account, that is realization, cash, capital. So I have opened the accounts, realization, capital, cash, and P's loan account. As we have already discussed, P's loan account is given, that we have opened, right? Now we will start the posting. First come from the asset side. As you are already aware, cash at bank is given, so it should be recorded in cash account as to balance brought down. So cash balance is 6,000. In cash account we write to balance brought down. Opening balance is cash account is 6,000, right? Next, rest of the assets are given, we directly post into the realization account. What is the entry we have discussed. Realization account data are 2 assets. In realization account 2, all the assets we write sundry. Individually we have to write, bear in mind, sundry debtors. Sundry debtors comes to, we write gross value 20,000. As I've already explained, gross value 20 I am writing. On the liability, on the credit side, by PDD, provision for doubtful debts, I am writing 1,000. Right? So gross value PDD will be written as credit. Then next we have to stock. The value of stock comes to 30,000. Next to investments, the value of investments comes to 10,000. Next I have fixtures. Fixtures value comes to 2,000. Then I have plant. The plant value comes to 35,000. Then I have freehold property. Freehold property, I have written abbreviation, 50,000. So we have transferred all these assets to realization. Now come to the liability side. Creditors. Creditors being a liability by creditors credited to realization account. Amount is, creditors amount comes to 30,000. Then by bills payable 7,000. And loan from P, just now we have discussed this loan from P, being P is a one of the partner, his loan will be, account will be prepared separately. It should not be transferred to realization. What is the reason behind this? The reason is the order of payment of the, when the dissolution of partnership form takes place, the order of payment says that first external liabilities. What do you mean by external liabilities? The payment to the liabilities which are external to the business, such as creditors, bills payable, bank loan. Then internal liability. Then next comes to loans from the partners. Then finally, if any amount left over will be taken over by the partners. This is the order of payment. So that's the reason why we are preparing partners loan account separately. Suppose in the question we have provided information stating that loan from partner's wife, loan from partner's brother, Mrs. P's loan, right? In such a case, that will be treated as an external liability, will be transferred to realization. Only loan from partner is a separate account, right? So loan from partner's account we have already prepared here. So loan is a liability, shows credit balance, hence by balance brought down. So loan from P comes to 30,000. Then capital balances by balance brought down. Opening balances of capital are 30, 25, 15. 30,000, 25,000 and 15,000. Then we have given general reserve. As you are already aware, this general reserve is to be distributed among the partners in the OPSR by GR, old profit sharing ratio. What is the old profit sharing ratio? The old profit sharing ratio as per the question is 5:3:2 in this ratio. So GR amount comes to general reserve is amount how much? General reserve comes to 15,000. This should be divided. So 15,000 divided by, so first one will get 7,500. Third one is 3,000. And the second one is 4,500. The ratio is 5:3:2. So now with the help of this we have done everything which is there in the balance sheet. Now come to the adjustment. The adjustment says that plant partnership was dissolved and the assets realized as follows. The amounts given. Whenever the assets realized, what is the entry? Cash account data to realization. So the amounts stock and investment realized 10% less than the book value. So we write in cash account to realization. Under that, first one is what we have stated in the question. Stock and investment. So stock value is how much? Stock value is 30,000 and realized 10%, in the sense 3,000 minus 27,000 I have written, right? Why did I write? That is 30,000 minus 10%. And investments value comes to how much? 10,000. Therefore, so 10% is equals to 1,000 will goes off, left over is 9,000 will receive. So stock and investments is done, less than the book value. Debtors, so debtors will be realized 17,500, that I have written. Plant will be realized 30,000. And freehold property was sold for plant is done, then freehold property sold for 85,000, right? So freehold property is done, then fixtures were taken over by P at an agreed value. Then now, so next, before comes to next, close this and find out the summation. The summation comes to 27,000 plus 10,000, plus 9,000. We have reduced 1,000, no? So 9,000, 27 plus 9 plus 17,500, then 30,000, then 85,000. So total is 1,68,500 is realized. So in cash account, here we have debited, in cash account we have debited, in realization we credit. By cash, 1,68,500 we have received. Clear? So next item is, the question says that fixtures were taken over by P at an agreed value of 1,200. So fixture is one of the assets. Now all the assets in realization, when it is taken over, basically remember that when we sell off fixture, what entry we pass? Cash to realization. So here we are not getting cash, but instead of one of the partners is taking over the fixtures. So we will transfer to partners capital. Hence the entry would be partners capital account to realization. In partners capital we write realization. How much value, who is taken over? Taken over by P at 1,200. So 1,200 in P's column we write. So the entry would be partners capital to realization. In realization we write by P's capital, that is 1,200. Once this is done, the next is creditors were paid off at a discount of 5%. So payment to creditors, what is the entry? Realization to cash. Creditor, how much we need to pay? 30,000. Was paid at a discount of 5%. So 30,000 minus 5% comes to 28,500. So 30,000 minus 5%, 28,500. In cash account we write by realization, 28,500, right? Next, once the creditors is done, next is Q agreed to pay the bills payable and expenses 1,000. Realization expenses, it's not payment by Q. Q agreed to pay bills payable. So Q is paying the bills payable. So whenever liability is paid off, what is the entry? Realization to cash. So instead of cash, we write partners capital. So to who is paying? So Q, to Q's capital. So Q agreed to pay bills payable. What is the value of bills payable? 7,000. In Q's account, we write by realization, 7,000, right? Their realization expenses amounted to 1,000. Realization account to cash 1,000 in cash account by realization 1,000, right? So like this we have done with everything, but as I told you, once the entire question is done, we need to see, is there any liability still outstanding? Is there any liability still outstanding that we need to check. So in this question, there are two liabilities, that is bills payable and creditors. Both the liabilities accounting treatment is already done. Hence, no payment is left over. Now, simply close the realization account and find out the profit or loss on realization, right? So, we will make the summation of credit items. So, 1000, then 30,000, then 7,000, then 1,68,500, then 1,200. So it comes to 2 lakh. You will write here workingly 2,07,700 summation of credit, right? Minus the debit summation, you will get profit or loss. Then 20,000 and 30,000, 10,000, 2,000, then 35,000, then 50,000, then 28,500, 28,500, then collectively 8,000. So 24,200 we are getting, but we are getting debit fee balancing figures. Hence, it is a realization profit in this question we are getting. 24,200. The summation is 2,07,700, both the side. Now this should be transferred to capital account. To capital PQR. In which proportion? In the ratio 5:3:2. Their profit sharing ratio is 5:3:2. So divided by 10. So 12,100. So total is 24,200. So next one is 7,260. 4,840. So due to the paucity of place, I have written like this, but you need to allocate appropriate place in the examination and write it properly. So this segregation we have done, divided the profits among the partners, and this will be credited by realization, right? So 12,100 and 7,260, then 4,840. Once this is done, close the capital accounts and realization ascertain the amount payable or receivable from the partners, right? So the simple way, make the summation 30,000 plus, then 7,500, then 12,100. So total is 49,600. 49,600 minus 1,200, we will get 48,400. This will be written as to cash, goes to cash account. Next, close the next account. 25,000, 4,500, 7,000, then 7,260. 7,260. So 43,760. 43,760, as there is no balance, therefore no balance on the debit side, 43,760. In the same way, close the next one. 15,000, then 3,000, then 4,840. 4,840, right? So 22,840. 22,840. 22,840. So these balancing figures of the capital will be written in cash account by capital PQR. So 48,400. First one 48,400, then 43,760, then 22,840. Make the summation. The summation 48,400 plus 43,760 plus 22,840 comes to 1,15,000 we are getting balance total. Now, but the most important thing, we have sufficient cash it seems to, therefore we need to make the payment of peace loan even. So generally peace loan is to be paid off. The entry would be peace loan account data to cash. So 30,000 total liability, peace loan is paid off, and in cash account by peace loan 30,000 we paid off. Now our cash account should tally. Always this loan account should be paid off. So now our cash account should tally, otherwise we are wrong. So we will make the summation, then so we are getting 1,74,500 credit side. Just check this side how much I'm getting, 6,000. So we can able to make cash account tally 1,74,500. See here we don't prepare any balance sheet because company business is closed, right? So cash account is getting tally and the capital peace loan account will get closed. This is a new item that we understood, that loan account should be prepared separately and it should be paid off later. Once the liabilities are paid off. Clear? So this is the basic crux of the dissolution of partnership firm. Please concentrate on this chapter. It is a very important. If you could able to do this chapter perfectly, you can easily do the insolvency even. So in my earlier videos I have explained the insolvency concept. You can watch those videos also if you want. I will keep the link in the description box even, right? I hope I tried to explain you and made you understand I feel that the dissolution concept. So do subscribe my channel and motivate me to make more videos, and give your comments. At the same time, if you have any question, you can ask me in the comment box. I would be very glad to give you a reply, right? So thank you very much for watching my videos, and please subscribe the channel for sure. Thank you.